Let's move over to CORZ Scientific, which is having a rough day. As a disclosure, I do work with Compass Mining, which does have a relationship with CORZ Scientific. CORZ Scientific is one of the largest, that's actually the largest Bitcoin miner in North America, with about 30 exahash online between self-mining and hosting. That's about 15% of the Bitcoin mining network, plus or minus a little bit. And as of this morning, they sent out a warning stating that they might not be able to pay some of their debts, that they're not making payments for October and November. This is a company that leveraged a lot of debt markets in order to grow during the bull market. And now they have to make payments on those debt markets while interest rates are going up. They're not able to meet those demands. Same time, Bitcoin, not doing super great, around 20K, but Bitcoin has not been as high as it has been in the past. And then energy rates are also going up globally, which is pushing miners on both sides. As of this morning, CORZ Scientific's sticker is, well, I keep saying that wrong this morning. Their ticker is down to 30 cents, about 77, down 77% on the day, which is pretty rough. I got to throw it up to the other mining expert on the panel. Danny, what you got?
You get back to me later. I don't know. I'm not feeling it right now. I'm just like, Bitcoin's going up, man. So like, that's good, right?
Give it to Jen then. Give it to Jen.
Yeah.
Okay, I'll take it. So I think it's really easy to ask the question why mining companies weren't prepared for high electricity costs coupled with Bitcoin's value going down. I feel like, we all know, I don't know a lot about mining, but I feel like if I worked at a mining company, these are questions I would ask. In the story, it says that they brought in financial and legal consultants. It feels like a little bit late for that. So much during this bear market, we've talked about preparing for a bear market, preparing for, catastrophic events or black swan events. And so it's just so surprising to me to read these stories and find that companies were so over leveraged, so underprepared for something that was so predictable, especially when you work in an industry that is hugely dependent on electricity and the price of Bitcoin. I don't know, Will, I don't know if you can shine more light on that for me. Am I missing something here? Why is no one prepared?
Yeah, I can provide some insights into this. And I think the reason is that Bitcoin miners are leveraged long Bitcoin. They are always expecting Bitcoin to go up. They're the buyers of last resort for Bitcoin because they're constantly mining it, right? They're buying Bitcoin from the network in exchange for energy. And so you have to set up these operations. You have to make future predictions about what's going to happen. And oftentimes those predictions are static, right? If you go and buy a machine, well, you're making a decision on what Bitcoin's price is going to be like in 6 months based on your information today. And as we know from like looking at Bitcoin, that could be anywhere. You could be up, you could be right, you could be wrong, but most of the time you're wrong. Like look at trading firms, right? We have all these lending firms blow up in April and May and June because they were leveraged long Bitcoin and altcoins, and they made a play and they were wrong. And Bitcoin miners are making also the same moves. It's just a little bit slower because they're not as leveraged as some of these lending firms were. So I think if looking at it like from 10,000 feet, it might seem like, oh, they made some poor decisions. But at the same time, it's very, very hard to look at all these variables and understand what the future is going to look like in 6 to 12 months. And some of these firms were too aggressive. I think in this instance, we can say that CORZ Scientific was probably a little bit too aggressive, and now they're going to have to go through Chapter 11 possibly, or at least some sort of bankruptcy deal. Probably come out on the other side of this, but they'll have to restructure just like we saw Compute North. That's why a lot of the successful Bitcoin miners right now are those who have been very conservative over the last 2 years. So they didn't get caught up in all the hype cycles. And that's true of any crypto company, right? Anyone who didn't go leverage long their own product or leverage long their underlying token, they're the ones who are normally doing okay at this point. Zach, up to you.
Yeah, it's a bit of a perfect storm, and I think you kind of captured it well, right? You got rising interest rates, rising energy prices, Bitcoin price down. Those confluence of those factors makes for some really painful decisions at some of these mining firms that rushed to go public during the height of last market's peak. So the fact that we're seeing this play out, I think, is a sad reminder that the volatility in this space does have real life ramifications for people and firms who are supporting the work of keeping these open systems running, right? So yeah, hats off to you, Will. I thought that was a good summation. I got nothing more to add besides well said.